Welcome to today's deep dive into the financial forecasts for December 2025. It was an unusual year, marked by events few saw coming. Despite some volatility in the weeks leading up to December, the markets overall proved profitable. Let's break down the outlook for gold, Bitcoin, and stocks. The S&P 500, for instance, saw an impressive almost 18% year-to-date return, recovering from a near 20% sell-off earlier in the year due to tariff concerns. The bull market broadened, notably with European and Japanese companies improving their fundamentals and boosting shareholder value. Gold experienced a significant bull run, a trend expected to extend into 2026. Trading around $4,200, after peaking near $4,265, some analysts even suggest it could reach $7,000. As geopolitical risks involving Russia, Ukraine, and Venezuela escalated, and central banks continued their purchases, gold benefited from its safe haven status. In fact, gold significantly outperformed Bitcoin in 2025, with investors favoring it as a more reliable store of value during uncertain times. Interestingly, demand for gold increased even as stock prices reached record highs, highlighting its uncorrelated nature relative to stocks and bonds. Silver also saw exceptional growth, more than doubling to a historic high of $58.83. Before a slight correction, outperforming even gold's impressive 60% increase. This rally was fueled by supply constraints, with inventories in London and Shanghai hitting historic lows, coupled with high financing costs in the metal markets. Industrial demand, especially from the electronics and solar energy sectors, further propelled this bullish momentum. Technically, silver traded within an upward channel, supported by indicators like the RSI and moving averages, suggesting that breaking resistance levels around $60.05 and $62.75 could trigger another historic rally. Some analysts even believe that crypto's weakness could further boost silver, potentially driving it to $175 based on a gold-silver ratio of 40. Now, let's turn to Bitcoin. The outlook here appeared less positive, collapsing from a peak of $126,000 in October to below $87,000 by December. Bitcoin was down 6%, behaving as a risk-on asset. Particularly during economic stress, Bitcoin also experienced ETF outflows. Deutsche Bank analysts attributed this fall to a broader risk-off sentiment. Hawkish signals on interest rates from the Federal Reserve, less regulatory momentum than expected, thin liquidity, institutional outflows, and profit-taking by long-term holders. Ultimately, Bitcoin lost some of its buzz as it became more integrated into mainstream finance, contributing to the volatility we observed in the Bitcoin space. In contrast, the stock market reached record prices, with the S&P 500 returning almost 18% year-to-date. Markets also anticipated a high probability of a Federal Reserve rate cut in December, with expectations of further cuts, potentially bringing rates down to 3.58%. Several other factors played a role in shaping these forecasts. The weakening dollar, with the DXY index falling near 99, supported gold prices. Geopolitical tensions involving Russia, Ukraine, and Venezuela, as well as earlier concerns over tariffs, also influenced market dynamics. In summary, December 2025 presented a complex financial landscape. While gold and silver demonstrated strong performance, driven by safe haven demand and industrial factors, Bitcoin faced challenges amid broader market uncertainties. The stock market, however, continued its record-breaking trajectory. Remember, these forecasts reflect analyst sentiment as of December 2025. And all forecasts are inherently uncertain.